Tushar Pradhan joins in with his sense of how the markets are shaping up. So Pradhan, thanks so much for taking the time out and joining us. What's your sense, Mr. Pradhan? Lots that's happened. There has been an S&P downgrade that has come about, a couple of regulatory changes that has happened. GAR has come about. In fact, since the last time we spoke, what's your sense on what all of this leads to? A potential cocktail for disaster, or you think we'll survive this storm?
Well, I'm sure we've survived bigger storms in the past, and these we will survive as well. I think we do tend to get a little excited about events in the short term. And I think, of course, not to discount these current events to think that they don't have any impact at all. But I think in the very long run, you have to remember that the activities are actually headed in the right direction. So if you take GAR, for example, I think everybody agrees that that step needed to be taken. The fact that it has been taken right now, and that's why it worries us. But I think as a fundamental feature, I think that's a very positive step. You're talking about the current events in the market, which has caused, generally the market to kind of take some time off from the bull run that it's been having since January. I think that's all part of the market. I think if you look at the fundamentals, I think we continue to chug along. If we are going to get 6.5% GDP growth rate real on a 1.3 or 1.4 trillion dollar economy, I will take that any day, as opposed to what we've heard. I think from the UK, I believe that they've had a negative GDP growth for the last 2 quarters. So compared to all of that, I think relatively India continues to be in a good space. So I think we'll weather the storm.
What do you do in times like these with the technology space? Because the numbers have been a mixed bag. Infi said the benchmark so low. There are a couple of companies which came out with standard set of numbers. Got a fairly decent response, and in today's session when Wipro came out with numbers which weren't that great, but the stock had run up prior to the numbers, it's gotten hammered as well. The guidance hasn't been too good. What do you do with IT as a whole? Do you invest into any of the large caps at all, or stay away?
No, I think one has to understand that the proposition that IT stands for, which is low cost IT infrastructure, low cost IT services for the global organization, I think that proposition is not changing no matter what we look at. What is changing is the competitive scenario. I think what used to be a fairly large market, and incrementally most of the Indian companies used to report pretty significant increases in revenue per quarter, was the fact that it was in the stage of discovering this market. I think where we have now reached is that we've plateaued out to a situation where each of these companies now have to compete pretty significantly against each other. And I think that's the reason why we are seeing a mixed bag. So while some companies do well and gain market share, there are other companies which are now suffering market share loss. So while earlier it was just an incremental scenario for all IT companies, I think it's changed a little bit to say that now the best proposition, the highest retention for clients is something which will drive the stock markets for these companies going forward. So I think any company which innovates, any company which really can offer the value that most of the clients are looking for globally, that's the one which will succeed. But as a proposition, I maintain that Indian IT is still in a very, very good space. The skills are required, the services are required.
Fair enough. Mr. Pradhan, also talk a bit about flows, because as we run channel checks, there is a sense that, a lot of FIs, given the uncertainty on GAR, would go the Macquarie way, and there would be liquidation in the market for the near to the medium term. How would you map flows over the next 6 to 8 months?
Well, I think while individuals are free to make their choices, I think the India proposition is again something which longer-term investors desire. So it is not because that most of these investors were in India because there was a tax treatment which was beneficial to them. I think they were here because India provides a proposition for significant gains in investment returns over the long term. Now, whether the tax situation changes over a period, I think most of the investors have to take that into stride. Obviously, for some investors, that may not be adequate. For some investors, they wouldn't mind the changes. For example, if you were to just look back in Brazil, after there was a huge inflow of foreign investment into their capital markets, the government in Brazil came out with a very unilateral tax on fixed income securities, for example. And that was a very, very large negative for incremental inflows. But if the government decides that that's what they want to do to kind of cap the tremendous inflow of foreign exchange into the country at any point of time, they're free to do so. Now, nobody really abandoned the Brazilian market. So as you see that the investors, as long as they are convinced about the inherent nature of the returns that any market can give them, the tax and the structure is just part of the job. And I think it depends on each's tolerance to say whether those structures are adequate, whether they're not, and that's an individual decision. But I think the investors the world over haven't really given up on the idea that India can provide significant returns in the long run.
Okay, Mr. Pradhan, before we let you go, really, what is it that you would place your money on at the current levels? Is there something that you're convinced that irrespective of all that's happened to the macro or the geopolitical scenario would do well over the period of next 1.5 years?
There are plenty of opportunities. The way I look at India and the way I've always looked at it is that India has always been a bottom-up opportunity market. I think we got carried away with the macro a little bit, and I think we are getting disappointed with the macro. But if I look back for as many years that I've looked at into this market, it's always been individual companies which have managed to succeed in spite of the environment. So whether you take the IT business itself, which thrived in spite of whatever environment that we live in, and will continue to live in, or whether it is the two-wheelers, or whether it's any of these success stories in stock markets, which have really returned tremendous returns to investors, is because of the inherent nature of the profitable enterprise that they represent. So it's not about the macro, it is not about whether this will drive this or that. So I think in that sense, we do see pretty much a lot of opportunities across the spectrum, though not the very obvious ones, and you could kind of look at it as that's saying that it's not a very obvious game. But across the market cap spectrum, I think there are pretty significant companies which can provide very sizable gains for most investors. Okay,
Mr. Pradhan, leave it at that. Thanks so much for taking the time out. Of course, sitting by patiently, I was just sorting out a couple of things, but thanks so much for giving us your thought processes, and look forward, more importantly, to have you more often on this show. Thanks for taking the time out.